First one is knock down or rebuild a PPR and turn it into a PPR. Then what if you knock down a PPR and turn it into an investment? And then the third one is, what if you knock down an investment and turn it into a PPR? So should we kick it off with a PPR into a new PPR?
Now, it used to be rather unnerving. The ATO had a ruling out that virtually said you demolish the initial house, you lose your main residence exemption on it, gone.
Yeah.
And they had all sorts of hoops you had to dance through to build a bridge between the two houses. But they've withdrawn that ruling. And that ruling was the only thing we felt as a profession was in the way of being able to use Section 118150, which is about renovating houses.
Yeah.
So basically, if she's demolishing her main residence and then going to live in the new house, this Section 118150 requires her move straight back into the new house as soon as the occupation is possible, the certificate of occupation. She must cover it with her main residence exemption for at least 3 months. And in the gap between demolishing the old house and moving into the new house must be no more than 4 years, and she can't cover another place with her main residence exemption during that time. If she dots all those I's and crosses all those T's, she can continue to cover the old house with the main residence exemption, the new house with the main residence exemption, and if she ever sells it, no capital gains tax.
Okay, that's interesting because I'm about to do that, so that's a relief. And I will be moving in straight away. So the second one is a PPR that you're knocking down and rebuild and turning it into, say, 2 side-by-side townhouses that are going to become investment properties. What should people consider with that?
So they're both going to be investment properties. That's an interesting twist. Well, if they're going to live in one side, they could use what I just described to cover that property. But if they count both of them as an investment property afterwards, well, then you've demolished the main residence and the main residence exemption attaches to a dwelling. It cannot be attached to the land. So once generally, if you demolish the main residence, you destroy the main residence exemption dating back 30, 40 years. It's only that you could say, well, I'm using this section to rebuild and I move in and I dot all my I's and cross all my T's. And that's what you get if they moved into one side of it. So they really do need to do that, at least on one side for 3 months, don't they? Absolutely. And then at least they've built that bridge and they can come back to that period of time, at least having their main residence exemption on it.
Clarity there. And then the third one is obviously an investment property that then becomes a principal place of residence. Do valuations need to be ordered?
Now, there's no benefit of evaluation there because she's doesn't get any reset, doesn't get to quarantine the capital gain. It's like we were talking about earlier where it's apportioned over the whole time, number of days covered. Never going to get rid of that sleeping capital gains tax liability. Keep lots of good records. And the demolishing costs do get to include in the cost base. Any costs do. You don't have to reduce the cost base because you demolish the old house.
Yeah.
That original price you paid stays in the cost base. Demolishing costs go in there. New build goes in there, the whole lot.
I think the key takeaway from what you've just described there, Julia, is first of all, get advice, but two, that the principal place exemption exists to the building, not to the land. And I think if people can take that away as a guiding principle when they're overlaying any decisions, I think that might give them sort of a guiding light or a North Star to work towards if they're trying to work out in their head.
And maybe to also realise the only time you're going to get a reset to market value to mess about with your capital gains tax calculation, if it was covered by your main residence exemption the whole time until it was first used to produce income, or you die there and your heirs inherit it. Otherwise, you don't get it. You've got this whole pro rata calculation. There's no mystique about it.
All right, good tip. Thank you. You do need to do a case by case on your particular circumstances and perhaps reaching out to us or Julie, we might be able to help you with that. But